Joining us now, Jackson Ader, a Keybanc Capital Markets equity research analyst. He cut his price target on Oracle to $300 from $350 after the company's earnings. Woof. You're still not close to the price, though, are you, Jackson? But kept his overweight rating on the stock. Welcome. And can we go back in time a little bit? Because the way that Oracle got to those stratospheric levels, where Larry Ellison was was the richest country on the planet at one time, the stock was much higher after a couple of announcements involving AI that talked about how much they were going to either provide or buy. And talking about it doesn't mean that it happens, does it? Is that the realization that's coming home now to roost?
Yeah, I think so. Yeah, thanks for having me, guys. I would say that was back in September when seemingly the company's cloud infrastructure money was still green. Since then, it's been mostly skepticism, because you're absolutely right, Joe. It's one thing to sign contracts, and it's another thing to execute on those contracts. And when you have a quarter like Oracle did last night, where they miss on some key metrics in the quarter, it's going to bring up questions of execution.
Its backlog that in September, I think it got a big jump to. The backlog of contracts that it got was $455 billion. How much realistically will actually come to fruition from that? Because the stock jumped on that.
Well, it's contracted. So,
you have an estimate?
I mean, yeah, half? But I don't know. I can't really handicap. It's like, oh, yeah, they signed. Now they have over $500 billion of contracted future revenue that is expected to flow into the company in the next, call it, I don't know, 5+, 5, 7, 10 years. I don't necessarily have a haircut on how much that will actually be recognized. I just mean
initially, everyone believed it and didn't question it, obviously, because the stock went up to those levels. Are we seeing a kind of a rolling correction in AI? I mean, this came back to earth, so that probably was a little bit hyped and a little bit of a bubble when it was up above 300, wherever it was. So is that possible that we could not have one big bubble bursting, but just have things come back to earth one by one?
Yeah, it's funny. I mean, if you look at Oracle's valuation, sure, at north of 300 or dollars on the share price, maybe you could say, hey, we're getting a little stretched here on valuation. But now below 200, you're talking about, I don't know, mid-20s on a forward gap PE basis. It's no longer all that expensive. But if we think about what drove the sentiment shift between September and today, there were a couple of things. One is customer concentration with very well-funded, but yet to be all that large AI startups like OpenAI. And then I would also say it's a massive capital-intensive build-out. It will require the company to raise outside funds. Now, management mentioned last night there's a few things that they can do to lower the amount that they're going to have to borrow. They're committed to the investment grade rating, but still, you're going to have to get a little bit creative if you're Oracle, because unlike maybe a Microsoft, you just don't have the kind of cash flow generation from your other businesses to be able to fund this in-house.